This is Bert Dohmen's chart guru, Bert Dohmen speaking on June 7th, 2013. Today we will discuss the S&P 500 index and how it looks at the present time. Here you can see the trading channel that we've had since late 2012. And you can see that it has been a very nicely defined channel. It's a statistical channel. And here was the April correction, and it met the downside of that channel, and then had the big rally going to new all-time record highs in the major indices in May of this year. Then we had the warning signal here on this day. This is a negative candlestick chart. It's an engulfing pattern. You could also say it's a shooting star, but on the candlesticks, this was a negative pattern, and it strongly suggested that there would be a pullback or correction in the stock market. And of course, that's exactly what we had. We got down to this level here on June 6th, yesterday. And the day before in our trading service, Smart Trader, we said, you know, it's going to, tomorrow it's going to hit good support levels, and that might give us that turnaround. If you look at the Fibonacci retracement levels, you can see them here. And we got the 61.8% retracement of this entire rise here from April to May, the big rally, and 61.8% retracement of that rise. That's always a very strong Fibonacci support level, and that's exactly what we got. In bull markets, that is frequently seen. Here's something interesting for people who like to have confirmation of the major trend. We use a special forward weighted moving average, and actually two moving averages. And you can see here they crossed over in December for a buy signal, and they have kept nicely apart during this whole time. It would have kept you in if you just looked at this. Here in April during the correction, they almost touched, but then they went apart again for a continued buy signal. So all the way you would have stayed in the market even during the recent correction. And the way these two lines look right now is that the market will continue to rally upward, and they will spread apart again. So this looks like a bullish chart. What caused the correction here? This last, whatever it is, 10 days or a little bit more, was actually fear that the Federal Reserve would reduce its stimulus. And that was propagated by Ben Bernanke's testimony before Congress. I think it was on May 22nd. Actually, his remarks were totally misinterpreted, and I think intentionally. And he really didn't say that they were going to tighten it. He just said if conditions warranted, and which means a strong economy would cause them to withdraw some of the stimulus. But if the economy continues the way it is now, which is rather weak, then they will obviously not do that. The Federal Reserve has put several $1 trillion into the markets over the last 4 years in order to get the stock market up, which they believe will produce a wealth effect, and that means that money made in the investment area will be used for economic activity, and eventually it will trickle down and get the rest of the economy moving. We're seeing some very positive signs already in the housing sector that is now filtering through to the auto sector, etc. So it is starting to work, but very, very slowly. And there's no way that the Federal Reserve would allow an important or big stock market decline at this time. They sure don't want to ruin the entire effort of the last 4 years. Okay, that's all we have for today. Be sure to go to our website, domencapital.com, and take a look at the 8 different services that we offer for investors. We have some for traders, some for long-term investors. Thank you very much, and we'll see you soon again. The next issue will be soon. We apologize for the break that we took, but we're traveling quite a bit, and so we will update this section of YouTube much more frequently in the future. Thank you very much, and wishing you happy trading.